Hello Achievers, welcome to Shakti's Knowledge Hub, myself Dr. Shakti Sukanya. In our today's discussion, we are going to see about a topic working capital. Previously, in the financial management subject, we have discussed about the fixed capital, like what is fixed capital, in what situation it will be required, and in what basis its level will be decided, like higher level of fixed capital or the lower level of fixed capital requirement of a business has been decided. So those things we have discussed, and today we are going to talk about the working capital. So this is also one type of capital investment in the business which is required for a short term period for a business. So that can be either a day-to-day operation or in any kind. So this is what we are going to discuss about, and also its factor. So how in fixed capital the different factors is deciding. Likewise, for the working capital requirement in the organization also there are some of the factors which is deciding in what basis that requirement is decided, or the working capital requirement of an organization will be deciding according to those listed factors. So that is what we are going to see. So before that, let's see about the introduction of working capital. Working capital refers to the capital required for day-to-day working of any organization. So, for the day-to-day running or requirement of a business, every organization will be in need of the working capital. Sometimes the fixed capital may not be required, but definitely this working capital will be required for each and every business. It can be of any type or maybe of any nature. Apart from the investment in fixed asset, every business organization need to investment in the current assets. So definitely every business organization mandatorily should have a proportion of investment in the working capital in a definite manner, which can be converted into cash or the cash equivalent with the period of 1 year. So the minimum or the maximum period for that particular working capital will be 1 year. So they can either convert that working capital into cash or maybe equivalent to cash. They provide liquidity to the business. So once they are converting that as a cash or maybe cash equivalent, that will be considered as a liquidity thing for a business. Working capital is of two types. So here this working capital has been categorized in the two aspects. That is the two type. One is gross working capital and the net working capital. Investment in all the current asset is called as the gross working capital. So all the current assets or whatever the thing we will be taken into account for our business, for that if we are investing some amount means all that thing are collectively and togetherly called as the gross working capital. Whereas the excess of current asset over the current liability is called as the net working capital. So the deduction from the current asset minus the current liability and the balance of that particular amount will be called as the net working capital. And these things will be discussed in detail with calculations of sums in the further detailed subjects, and that thing we will discuss in a later videos. So this is what the working capital is about. Any fund which is required for a business for the day-to-day operation, and it is mandatory for every type of business, and that will be converted into cash or maybe cash equivalent, and which is the period for maximum of 1 year and will be considered as the liquidity for a business. This working capital is of two types, so the gross working capital as well as the net working capital. And let's see its factors. Factors affecting the working capital requirement of an organization. So what are all the different factors or the elements which is affecting or disturbing or which is deciding the working capital requirement of any organization? The first one is the nature of business. Just like that in the fixed capital, this nature of business itself is deciding. Depends on its nature, the working capital will be required in what level. So every business need this, but the thing is in what level or in what proportion the fund is required for the working capital for a business. A trading organization need a lower amount of working capital as compared to the manufacturing organization, as trading organization undertakes no processing work. So just the same, in case your business is the manufacturing process or manufacturing nature of concern, definitely you will be in need of more working capital, but compared to the trading, because trading organization or trading, that is the selling transaction related nature of business, will need only the lower amount of working capital. So the reason what they are insisting is this trading concern will not be undertaking any of the processing work like the manufacturing process. So depends on the nature of business, the requirement proportion of a working capital will be decided. And the second is scale of operation. So just the same as the scale of operation, whether your business is large or medium or low, depends on that proportion of working capital will be decided. An organization operating on the large scale will require more inventory, and thus its working capital requirement will be more as compared to the small organization. So the biggest organization or the large scale nature of business definitely need to maintain more inventory, that is more stock to maintain their day-to-day expenses. So that can be of any forms. These things we will discuss in a detailed manner in the further subject. So there you will understand easily. So it depends on that inventory, that working capital requirement will be very high for the large scale operation of business. But in the opposite scenario, in case your business nature is a small one, that is the small scale organization, there the working capital requirement will be less compared to the large one. And the third factor is the business cycle. So the cycle of the business, whether your business is going in boom or maybe in a depressive stage or maybe in stable, depends on that nature or the business cycle, this working capital requirement will be decided. In the time of boom, more production will be undertaken and so more working capital will be required during that time as compared to depression. So we have the business life cycle chart, so that we will discuss in the other subject in detail, like introduction, growth, maturity, saturation, decline. Likewise, every business will have such a cycle, and depends upon this cycle that business investment for that working capital will be decided. Here the situation is boom. In case the business is in the top positive growth aspect, there the working capital will be high because the production will be high. In that situation we need more working capital. But in case of depressive stage or maybe in the negative aspect of the business, negative level of the business, there will be no much requirement for the working capital. And the next factor is seasonal factor. So it depends on the season of demand of the product in the market or maybe from the customer point of view, this working capital will be decided. So the seasonal factor, season in the sense not the nature season, it depends on the season requirement of the product. So that is also sometimes partially depends upon the nature and its season. So here the peak season means the demand will be high, there the working capital will be highly required. But in case of there is no much season or maybe very less requirement for a product in particular season, means there their working capital will be very less in a very less required manner. During the peak season, demand of the product will be high, so the high working capital is required. And in case the lean season, that is there is no much demand for that product, means that their working capital requirement will be less. And the next factor, credit allowed. If credit is allowed by a concern to its customer, then it will require more working capital. But if goods are sold on cash basis, then less working capital is required. So based on the credit policy of every business, whether the company is giving credit to the customers, whether the customers is availing any credit facility from the company. So in that situation, that is if you are selling your products or your goods in the credit basis, means in that situation definitely you need more working capital, because you won't receive a bill amount of cash in an immediate manner because you have given in a credit basis. So in that situation the company need more working capital. But in case any transaction or every transactions will be takes place through the cash basis, means definitely there will be a flow of fund or cash in the business in all the time. So there the working capital requirement will be very less. So depends on the credit allowed or the credit policy maintained by the company, the working capital requirement will be decided. And the next factor is the credit availed. So just like how we are giving the credit facility to the customer, the opposite scenario, the credit availed. In what level we are availing or we are getting the credit facility from the supplier side. That is from when you are purchasing your raw material or any of the other things which is required for your business. If your business or if your company is availing or which is getting any credit facility from the outside, in that situation or according to that situation, the capital work, that is the working capital requirement will be getting varied. If a firm is able to purchase the raw material on credit from its supplier, then the less working capital will be required. So opposite situation, here we are giving goods in credit and here we are getting the raw materials or any of the supplies in the credit basis from outside. So in this situation, the requirement of working capital will be less because we have a credit facility which is availing from the supplier side. So we can make the payment in a later basis. So no much requirement in hand of money in immediate basis. So this working capital will be required on that basis, whether the credit is available or not. And the next factor is inflation. Working capital requirement is also determined by the price level changes. For example, during inflation, price of a raw material or wages also rises, resulting in the increase in working capital. So any inflation situation, any financial deficit situation arises means, so some of the examples like the price of the raw material, or maybe you need to give wages. We cannot expect from our market environment or maybe from any of the other sources for the surplus fund for our business support. So in that situation, definitely we should be ready with our working capital requirement. So depends on the inflation. This is one of the important factor which is deciding the working capital requirement. So in this situation, during this inflation or this deficit period, there will be a high level of requirement of the working capital for our business. And the last factor is operating cycle or the turnover of working capital. So what is the operating cycle of the business, and also the turnover of working capital. So what is the time, average time we will be taking for get back our working capital which we have invested or which we have used in our business or the organization. Turnover means speed with which the working capital is converted into cash by sale of goods. So the turnover, the amount what you are getting through the sale of your goods or services or something, that thing is called as the turnover. So what is the speed or what is the level you will be getting back your money. So on that basis also the working capital will be decided. If it is speedier, the amount of working capital requirement will be less because we will get the fund very soon. We will once after or maybe soon after the sales of goods has been takes place, definitely we will get the cash in hand. The turnover speed is very high. So in that basis, the working capital requirement will be very less. But in the opposite scenario, the operational cycle or maybe the turnover will be taking time, means that to make a survival in your business or to make a proper running of your business, the working capital requirement will be very high. So it depends on this factor also the working capital is deciding. So these are all the different factors listed and which is deciding the working capital requirement of every businesses. Okay friends, with this we are coming to the end of today's discussion and we'll see you all soon in the next video. If this is the first time you are seeing our channel, do subscribe and hit the bell icon for the future notification, and mention your requirements and your clarifications of doubts in the comment section as well as in the mail ID which we have given in the about page. See you all soon in our next video. Thank you all for watching. Have a good day. Bye.